August 29th, 2023. We did have a leg one, leg two today. You can see from bar one to bar 13. It's essentially, or I would say maybe the open of bar 14 is leg one. And you put it where the second leg starts, basically the 16 low. And that's exactly where we went to today. It's the tick, which is pretty cool. But, the reason I use 14 is because it was the first big enough pullback to get a second leg. But I wouldn't get overly bogged down in the details of measured moves on days like today. On days like today, you kind of just need to be buying. We have an open gap with two high, so traders who sell above two should make money. Like how I talk about those trap traders all the time. Traders who sell above two should be able to make money, but six never lets them out. And so you have traders who sold above two who are trapped, and then traders who sold above five, you can see they sold the breakout point. They tried to get out and they were never let out either. So when you get two open gaps early in the day, it's an immediate, your internal alarm should be going off that today might be a bull trend day. You can see that we actually got a third open gap as well with the 9 high and the 16 low. So we have three open gaps today, and there was fourth too, actually, technically the 14. And so just bears just could not make any money today. Think about the first stop order bear to make money today. This selling below 14, this is not enough to make a scalp. You need, there's such a tiny amount of profit to make that selling below 14, you can't really make anything. Maybe if you sold below 36, you could get close to a 1-to-1. But you should just not be selling on days like this. Once the market starts to rally up like this, you just need to start buying, or be flat. It's better than I find the evolution of trading these days is in the beginning when you're starting out, you just try to pick tops constantly and you just sell all the way up. And then after you do that, I don't know, 20, 30 times, you start to figure out that you shouldn't be selling on these days, and you'll just kind of start to sit there and not take the sells, but you won't take the buys either. And then, after you do that a whole bunch of times, you eventually start to buy. And I think the reason it's hard to buy is because you're so far above the moving average and everything doesn't quite look, the way you want it to. And that's pretty common because, these trend days, in order to trend all day, they have to be keeping traders out. So traders are constantly chasing the market. And so when they don't look quite right, traders are constantly chasing the market, and that leads to big bull trends. Bar one, bull bar closing near its high. Bar two, doji bar, so bad follow through for the bulls, but they still do have a good bull bar on bull one. Generally, bar one, generally 20% chance going to be the low of the day when you see bar one. Bar three, big follow through for the bulls, and bar four, big follow through for the bulls. So you have four straight closes without a bear bar, and three of them are pretty good bull bars. So probably going a little higher. You do have to keep in mind that sometimes you're going to get an opening trap, which is not uncommon, but you just do have to keep that in mind. Traders can buy above four, reasonable thing to do. Bad follow through on 5 and 6, but no real reason for bulls to exit. 3 and 4 deserves a second leg up, so okay to still be long through 5 and 6. And then you get a big bull surprise on 7. And when you get 7, you should notice that the 2 and the 6 gap is open, and so you should be wondering immediately, are bulls going to be able to keep the gap open with the 5 high? If you get follow through from 7 and they're able to keep the gap open, this might be a bull trend from the open. But if bar 7 disappoints bulls and lets the market come back to the 5 high, then we're probably in a trading range, because the hallmark of a trading range is disappointment. And so when you get disappointed traders early on in the day, it's probably going to be a trading range. Bar 7 is sometimes a big surprise bar, and today it was. You can see we ended up getting above last week's high. That was a magnet that Al pointed out in the trading room today. I thought was interesting. And he also noted, go to the day, that this high was important because it's the neckline of the double top here with August 18th and August 25th. So neckline of the double top here for the bulls. So and something else to keep in mind on the daily chart is we're getting kind of a similar thing, right? So you get a big breakout here, and traders will sell this breakout point hoping where they're going to be able to make money, and they're disappointed in this bar. So the question really becomes, is the market going to disappoint the bulls over the next couple of days? Are we going to be able to get back to this August 24th high? If we're able to get back to this August 24th high, traders who sold above and scaled it higher were able to make money, meaning that, this is probably a trading range. And if it is a trading range, then the bulls are disappointed, and, we might not go that much higher. So bulls want big follow through tomorrow, but more likely they'll be disappointed and we'll get back to this high. But anyways, big follow through 7, minimal follow through on 8, but it's still follow through. So buyers below 8, and, bull bar 9 closing near its high. You could argue this. I kind of see this as a gap because this is a breakout point above 9, and the reason it's a breakout point is because it's a bar that there should have been sellers above. There should be sellers above 2. There should be sellers above 5 and 6. but there wasn't. And so it traps traders. And so it's a breakout point. And so I think of it kind of the same way with 9. And so there should be sellers above, but there wasn't on 10 and 11. And that's a pair of bull bars. So now you clearly have trap traders above 9 once you get a pair of bars in the other direction. Or essentially bears hoping to get a bear bar, and then you get a pair of bars in the other direction for the bears. So it's, bull move. Sorry that I didn't state that properly. And you can see we tried to pull back to test it, but we were never able to. Anyone who bought up here, bad follow through on 12 and pretty climactic bar on 13. It's a potential parabolic wedge, 1, 2, 3, or you could say 1, 2, pull back 3, 4. Kind of depends how you want to look at it, but regardless, it's a parabolic wedge. That's why we found so many sellers on 14. 14, I think bulls exit below 14. It's a big enough bar that it should get a second leg, but it's still always in long. I think it was always in long the whole day today. 40 is an interesting bar because if bears get 41 as a bear bar, the always in would flip to short. But just when traders need one more bar to flip the always in, especially on a bull trend day, if the bears need one more big bear bar to flip the always in, just fade that because it very rarely happens. Kind of the same thing on 46. If 47 is a big bear bar, it's always in short, but they don't get it. 53. If 54 is a big bear bar, it's always in short. They don't get it. It's what usually happens. And those traders are constantly, because bears are going to be constantly disappointed on a bull trend day. It makes sense. High 1, so minimum follow through on 15, high 1 on 16, but not that good. Low 2 short, kind of, low 1 short, I guess, on 17, but really not that good. Best case scenario, you're going to get to the moving average. But really just not a great trade to sell. It's better to just still be looking to buy or wait for us to go sideways to the moving average and then look to buy. 18 is a high 2. It's low probability, but the low probability stuff does this sometimes. So because, the reason it'll do that sometimes is because it's low probability, so not many traders are taking it. By definition, that's what low probability is. And so when you start to get follow through, you have more and more traders getting in, and the traders who got in here can make a really large profit. But I don't think it's all that good. And something to keep in mind is, traders who sold above 14 should have been able to make money above 14. They should have been able to sell here and sell more higher, and the market should come back down. Why? Because it's probably a trading range at this point. Once you get 14, the market's probably in a trading range. Sometimes it'll go for a measured move up, so maybe somewhere around here, and then, drift back down. And so you could argue the trading range starts here. Sometimes you get a measured move up and then it drifts back down. But today that did not happen. And so you can see we got 20, not great follow through on 19 or 20, bull bar on 21, but you're buying really high in what's probably going to become a trading range. Follow through on 22 and 23, maybe okay to buy the close. It is okay to buy the close. It's a bull trend day. We've been above the moving average all day. It's 6 straight bull bars on to 23, and it's a close above the new high, but you probably want to wait to get a second bull close on 24 above the high. And you can see we get a doji. And so some traders who are looking to buy, get disappointed in the fact that 24 was not a bull close. And so they don't buy. But, with those traders not buying, when you get a surprise on 25, 26, now those traders are forced to buy higher, and it keeps forcing traders, not to get in the market and buy higher. And that's, again, like I said, keeping traders out is how the market trends up all day. So 25, 26, more surprises for the bulls. This whole thing was a pretty big bull surprise. I thought there would be sellers above here. 27, so more follow through for the bulls, and bear bar 28. Essentially a two-legged correction. I looked at this whole thing as a wedge. It's 28 and then pull back 29. You can see any bull who bought 27 is disappointed in 28, and on 29 they exit around break even. It's pretty notable. The high of this is around the close of this. So anyone buying here just wants continuous bull bars, and when they don't get it, a lot of them just exit. 30 trades below 29, but probably buyers below. 31, 32, I. And, 33, a potential wedge top, but it's really not that good. There's very, very, very likely buyers below. And we get buyers 34. So it's potentially a sideways 3 push pullback for the bears or for the bulls. And then you get follow through on 35. And, the only real way to lose money buying on these days is to not understand where your stop needs to be when you're buying. It's okay to buy any bull bar today, but you have to, the stops change. So if you're buying, let's say if you're buying above 4, well, your stop should be below 1. And then you get this follow through, your stop goes here. You get more follow through, your stop goes here below the breakout points. And, when you're buying up at, the 30, the 35 close, you got to think we might be forming a trading range. And so if you put your stop down here, you're probably putting your stop at the bottom of the trading range. And if you're buying up here, you got to know that it's likely we're going to test the moving average pretty soon. So if you're buying up here, you need to understand that you're probably going to have to buy more lower. So traders who bought up here are willing to buy more above a bar like 41, and they get follow through 42, 43, and they'll scalp out around break even. And so you can see traders who bought the close of 35, 36 bought more above maybe 41. And when we got back to the 36 close, those traders who bought more lower got out around break even during 36, 37. So that's what causes this sell. But and I got sidetracked there. So inside bar 30, 37, and bears get a surprise on 38 and 39 for sure, and 40. So it's a 3-bar bear surprise. But traders bought below 37 because they're buying for any reason in a bull trend day. And so traders will buy below 37, basically betting that this is good enough for a second leg. And so when we start to go down here, you look at this breakout, and I use the word breakout carefully because it's probably just a trading range 2 legs down. But you got to be thinking that, it's a bull trend day so far, and we're at the moving average, and we haven't really tested the moving average yet today. So there's probably going to be buyers here. And what are the odds that bulls who bought below here are really going to lose money? What are the odds of that happening today? They're not very high. Bulls who bought below here are very likely going to make money. So, that makes 40 more of a buy the close bar than a sell the close bar, because you're betting against those bears getting that follow through to flip the market to always in short, and they're just probably not going to get it. And you can see they don't. So follow through 43, 44, they get out 45, buyers below 44. You can see bears essentially got down up on 45, second leg on 46, and 46 inside bar, bears looking to get a big follow through bar, but they're probably not going to get it. And, when you start trading, the tempting sells are probably like 33, 46, maybe 57, probably 14. But you just need to learn to not take those because because think about what you're betting on, right? So if you sell below 46, what are you hoping is going to happen? That you're just going to get a massive collapse down to basically probably here, which is, a reasonable support zone, or maybe we're going to close this high, or, so just somewhere in here, you're looking for a massive collapse. And if you start to get to the collapse on bar 47, you just get in here, and your probability would just be infinitely better, selling lower than it is here, selling higher, because that you're probably not going to get the follow through bar. And so it's just way better to wait. And if you do happen to get it, then great. But it makes way more sense to just bet against the breakout, and because they're probably not going to get it, and you're just going to make a lot more money doing that than trying to take these sells and just blowing up your account. Where was I? So 46 inside bar, 47 bad follow through expected, 48. Some bears look at it as 3 pushes up, but I would just keep buying until we test the moving average. These days the way I look at it is you can pretty much buy with impunity until we test the moving average, because the bulls are going to test the first test the moving average. The bulls are going to take the buy, and they're going to look to get to a new high. You can see here we test the moving average. The bulls bought, we got up to a new high, they scalped out. So you pretty much when it's a bull trend, it's not this in trading ranges, but when it's a bull trend and or a bear trend, right? Bear trend, you get 20 closes below the moving average. Bull trend, you get 20 closes above the moving average. By this point, you can pretty much just buy the market and know that once we get back down here, there's going to be buyers and probably get back up to a new high, especially by this point. And so that's why it's okay to take those, scary looking buys, because even if it does pull back, you can just buy more and you're going to be fine. Very likely you're going to be fine. Obviously nothing is 100%. II 51, 52, and bears end up getting down to the moving average 53, 54. Bears who sold the 40 close, you can see they're let out at break even on 54, which is a warning to bulls that bears are starting to make money. Another warning came much earlier that any bear who sold above 28 now made money on 38. And so that's the first time limit order traders made money all day for the bears. So limit order bears starting to make money in here should tell you that this is probably more of a trading range than a bull trend still. But you still know that, it is a trading range, but you still know the bulls are going to buy the moving average. 55, 56, follow through for the bulls. We're probably going to get back to the 52 low, because traders who buy below there should be able to get out of break even after 53 and 54. It's bull trend day. You can see there, I don't think they're quite able to. Low 99.5, high 99.5. So 90% of the time, if it just hits your order, you're not going to get filled. Needs to go one tick past. So, maybe 10% of bulls got filled there. And then we got a double bottom, and the rest of the bulls got filled on bar 60. or sorry, on 59. Double bottom buy, but this is kind of one of those things where you could buy 58, but if you do, you need to have a wide stop and be willing to buy more lower because we might get another leg down and 3 pushes down and then a wedge. 60, 61, pair of bull bars, 62. You can see we got up to a new high, and any bulls who bought for any reason down here scalped out. 63, bull bar, but probably just 3 or 4 pushes up and trying to test this high again. So I'd rather wait to see follow through at this point. And bad follow through 64. So you can see we tested that high again. Bulls failed twice to go up, and so we're probably going to make an attempt. Make an attempt down. But the attempt is obviously going to most likely fail because we're in a bull trend or a trading range. We're not in a bear trend. So bulls buy the moving average 68 or 66, 67, 68. It's 2 legs down for the bulls. So it's 3 pushes up and then 2 legs down for the bulls. Bears will see a double top and hope that we collapse through, but it's just very unlikely. And you get follow through on 69, 70, 71, 72 for the bulls, break out to a new high. But we're breaking up to a new high, yes, but limit order bears have been making money here. So what are the odds that the bulls are going to trap the bears right now, this late in the day? Probably pretty low. So you can see any bears who sold above the 64 high were able to make money during 77. That's one of the reasons there were buyers there. I think I already discussed the daily chart. Big bull surprise, but traders, we might just be testing a vacuum test of this close where traders who bought, it was a reasonable thing to do to buy, after a pair of bull bars. So we might just be getting a vacuum test of that close, and maybe we'll get back to this high. The 824 high I think is going to be a really important price point over the next couple days, and I would pay a lot of attention to it personally. If bulls get big follow through tomorrow, maybe we'll be somewhere up here, or pay attention to if we start getting to try to close this little gap. Those are all things to pay attention to. Yeah.